Okay guys, next chapter is cost, volume, profit analysis, CVP analysis. So this is another section of F5. So I call this section B. Now they have changed this one to C because there's another section, just 2 chapters, which is called sections A. And then you have section B that we covered. And then there is this section. Okay, so cost, volume, profit analysis or CVP analysis is looking at the relationship between cost, units, and profit. So that's why it is called CVP. CVP stands for cost, volume, profit. Okay, so there are a few terms you need to know. You will have studied in your previous studies. I will explain them again and then we will directly jump to the question. Remember, my style is working on question directly, and that is how you understand better. Okay, first thing is contribution. We already saw that. Contribution is sales minus variable cost. So contribution is what is left after you deduct the variable cost from it. So it is called contribution because it means contribution towards earning profit. Contribution is not profit by itself, but the more contribution we have, the more there is chance we will make profit after deducting fixed cost from it. And then break-even point. Break-even point is the point in sales where there is no profit, no loss. So this is how many units we need to sell or how much revenue we need to have so that there is no profit or no loss. So we will see that in a minute. And then margin of safety is how much safer we are from making a loss, which is the difference between budgeted units and break-even units. Okay, so let's jump directly to question. Okay, we have a basic question, single unit, break-even point and margin of safety and stuff. But in a 5 level, you will have multiple products as well. So first, let's look at the simple question. Required, what is the budgeted profit per month and what is the break-even point in sales? What is the margin of safety? And what sales must be to achieve a monthly profit of 120,000? Okay, a company makes and sells a single product. The selling price is 12 per unit. The variable cost of making and selling the product is 9 per unit, and fixed cost per unit are 240,000. The company budgets to sell 90,000 units of the product a month. Okay, let's look at first thing first. What is the budgeted profit? If we have units, 90,000, and our sales revenue is going to be 12 multiplied by 90,000. Variable cost is going to be 9 multiplied by 90,000. So it will give us a contribution of 270,000. When we minus the fixed cost from it, it gives you 30,000 budgeted profit. You could have simply taken, the easiest way to do would be take the sales price minus the variable cost, which is 9, multiplied by 90,000. It will give you contributions directly, and then you can minus the 240,000 will give you profit. So I'll put it here. So instead of going through all these details, you could have directly done it like this. Okay, next thing they're asking is what is the break-even point in sales? It is the level in sales where we have no profit, no loss. So I will find break-even point in sales revenue and in sales units, both. So to find break-even point in units, we simply take fixed cost and divided by contribution per unit. Fixed cost is given as to 40,000, dividing it by contribution per unit, which is 12 minus 9, and it gives us 80,000 units break-even point. To find break-even point in sales revenue, you find CS ratio. So we take the same fixed cost but divided by CS ratio. CS ratio is contribution divided by sales. CS, contribution divided by sales ratio. So we have contribution of 3 for every 12 sales. So we have 0.25 or 25% CS ratio. So it gives us 960,000. So if we have 960,000 revenue, or if we have 80,000 units, we will have same break-even point. If I take this units and I multiply by the sales price, I will have the break-even point in sales revenue as well. So both of them can lead to same place. Or if I take this 960,000, if I divide it by 12, it will give me the same as top. Okay, so let's prove, to understand it conceptually, is it actually true that at 80,000 there will be no profit or no loss? If we have 80,000 units, then multiply by 12, we will have sales revenue of 960,000. Variable cost is going to be 9, so we will have a contribution of 192,000. Let me write this as a minus. 48,000. Made a mistake somewhere. Let's look at variable cost. Variable cost is 9, yeah. So 80,000 multiplied by 12. And then variable cost 80,000 multiplied by 9. So we have contribution to 40,000, yes. And then minusing fixed cost, we have 0 profit, 0 loss. So it proves that at 80,000 units or 960,000 revenue, we will have no profit, no loss. Next, we have margin of safety. It is how much safer we are from making loss. So margin of safety is, it can be found in units, it can be found in sales revenue. You look at budgeted sales, which was 90,000, minus break-even sales, which is 80,000, will give you margin of safety, which is 10,000. Or you could find it in sales revenue. You look at budgeted sales revenue, which is, we found there 1,080,000. I'll just link it there. And minus break-even sales revenue, which was 960,000 here. And that would give us break-even margin of safety of 12,000. And when you take 10,000 multiplied by 12, it gives you the same thing. Okay, remember these are two different things. One is margin of safety in units, another is margin of safety in sales revenue. Sometimes it is asked to find margin of safety as a percentage of sales. You just take the margin of safety divided by budgeted sales. So it becomes 11.1%. Margin of safety divided by budgeted sales. Same thing. So what it means is that if our sales decrease by more than 11.1%, then we will make a loss. Okay, next is target profit. Sometimes they ask you what is the sales going to be to achieve a certain profit, which in this case is 120,000. So we use the same thing as we did here in finding the break-even point. In fact, I'm going to just copy this to show you that it is very similar. The only thing that I'm going to change here is I'm going to add that target profit with it. We are not just trying to cover our fixed costs. We also want to earn 120,000 profit, so the units would be 120,000 units. Or 1.4 million sales, which if I take the units multiply by the sales price, it gives me same thing. So same thing, the only thing we added is with the fixed cost we have added the target profit as well. Let's prove whether 120,000 units or 1.4 million sales revenue will have a profit of 120,000. Okay, so we have 120,000 units multiplied by 12, 120,000 units multiplied by 9. Let's write this as a minus. $120,000 and 120,000. Yeah. Why does this one seem more? 120,000 multiplied by 12. Okay, this is 90. 108,000, so it gives us contribution of 360,000. After minusing the fixed cost from it, we have 120,000 profit, which proves. Okay, next we have multiple products. I have two questions, multiple products, break-even point. I have done this question as well, and then there is another one as well. So I will do the next one. So I've already done this one. You can look at it, how I have done it. And I will go to the next question. This one. Before we look at this question, remember, break-even, multiple product break-even point only works when there is more than one unit, obviously. That's why it's called multiple product. And there should be a standard mix. They should tell you the proportion the units are sold in, like it is told in this question, you will see. Okay, so let's find all of those things we did for the previous question, but this time it is for multiple product. Okay, assume that budgeted sales are 2,000 units of X, 4,000 units of Y, 3,000 units of Z. So this is like a standard mix. So for every 2,000 units of X, there is 4,000 units of Y, there is 3,000 units of Z. Sometimes it is given as a percentage. What you can do is you can convert it to percentage as well if you want. A break-even chart would make the assumption that output unit of, okay, this is something information given about break-even chart. From this question, we will make chart as well. So this question is actually for chart. Okay, so what is it saying is that we have a margin of 2,000 and 4,000 and 3,000. Okay, so we have units, 2,000, 4,000 and 3,000. The variable cost is 3, 4, 5. Total becomes 6,000, 16,000, 15,000. And we have sales revenue of 866, which gives us 16,000, 24,000, 18,000. Total revenue is 58,000. Total variable cost is 36,000. Fixed cost is 10,000. We have 47,000 budgeted cost, which minus from the 58,000 will give us budgeted profit. Okay. Now let's find break-even point. But remember, before we find break-even point, every information about multiple products has to be divided into mix. We have to find an average price per unit. We are not finding contribution or sales price or variable cost per unit. We are finding it per unit per mix. Per unit was given at the top, so I've just written it here. We have 866 and variable cost is 345, which if you take 8 minus 3, it will give you contributions here. Now let's do these things for mix. So how many units do we have in a mix? We have 2,000 units of these, 4,000 units, and 3,000 units. When we add it together, it becomes 9,000. You can convert it to percentage as well. It makes the job easier. So you could take, it is not important, but if it is given as a percentage, is how you do it. So 2,000 divided by 9,000 will give us 22%. 4,000 divided by becomes 44%. And 3,000 divided by 9 becomes 33%. So if I convert it to percentages, it becomes about 22%, 44%, 33%. Overall should be 100%. Now let's look at sales in a mix. We just take sales price multiplied by total units in a mix. So it gives us sales revenue in a mix. So again, doing it for all 3 products. And then adding it together, we have total sales revenue in a mix. Then we are doing it the same thing for variable cost. So I will find everything per mix. And then contribution. Or you could simply take the sales revenue minus variable cost. It will give you the same thing here. So there are a number of ways you can do things. Now what I will do is I will find everything per mix. Like I will find average contribution per unit per mix. Contribution is 21,000 and units are 9,000 in a mix. So per unit, per mix, contribution is 2.3. So some units have 5 contributions, some units have 2, some units have 1, but the average per unit per mix is 2.33. The CS ratio as well, I find average CS ratio. But first let's look at sales revenue per unit per mix, which is 6.44. So if I take contribution per unit per mix divided by sales per unit per mix, it becomes 0.36, or you could say 36%. Now let's find our break-even point. So our fixed cost was 10,000 dividing it by CS contribution per unit, average contribution per unit per mix, which becomes about 4,285 is break-even point. All units, when they are sold in standard mix and the total units become 4285.71, and we will have no profit or loss. We can find the same thing in units in revenue. We have to divide it by CS ratio. Okay, let's actually prove whether 4,285 units or 27,619 units gives us no profit or no loss. You don't have to prove it, but proving will boost your confidence. Okay, if we have total units of 4,000 and we are finding the ratios of X, we could simply take the units and multiply by 2,000 divided by 9,000. So units of X in a mix and total units in a mix. Or, because we have calculated it as a percentage, you could directly multiply it by that percentage. See, it gives you exact same thing. So what I'm doing is I'm breaking down the total units into the units of each product. The break-even units. Or we could directly multiply Okay, so when I add it together, it should be equal to the total units there. So now let's prove whether it gives us no profit, no loss or not. So I've already found the units. I will just bring it here and then multiply by the sales revenue, sales price, which becomes 952. Remember, the sales price of X is 8, multiply by 6, multiply by 6 as well. And the contribution from this, remember, I didn't need sales revenue because but I found it for something else, just for comparison reason. I directly can find contribution and it will give me answer. So again, taking the units, multiply by contribution of 5, units multiply by the contribution of 2, units multiply by contribution of 1. Adding it together, we have 10,000 contribution. When we minus the fixed cost from it, we will have no profit, no loss. Let's do the same thing we did here, but this time do it for sales revenue. So we have 27,000 revenue overall for break-even. Multiply that by the revenue of X divided by total revenue in a mix. Or we could take total sales revenue, multiply by a percentage that we already found. I've linked it to the wrong thing. Sorry, the way I've done it here is taken these units, multiply by the sales revenue, which is 8. So it should give you the same thing. Next, revenue multiplied by total sales revenue divided by revenue in a mix. So do this for all 3 products. I think I've done it for wrong units. Okay, I've taken the first unit X. Total sales revenue multiplied by units revenue in a mix of Y and divided by total sales revenue. So at the end, it should equal to the total sales revenue we have at the top. And if you multiply by the units, it should give you the same thing. So this is just proving that both of them give you the same result, comparing here as well. So obviously if our revenue is same, so our cost and profit is also going to be the same. Okay, next thing you have is target profit. Let's assume they ask you to find revenue for a certain profit. Let's assume what should be the sales revenue to have 20,000 profit. So just like we previously did, we will find target units we will find the break-even point in units and break-even point in sales revenue, but here the target profit in units and the target profit in sales revenue. So we have target profit 20,000 plus the fixed cost 10,000 divided by that contribution per unit, which is 2.33. So it gives me 12,857 units to have 20,000 profit. And in sales revenue, we are doing the same thing, fixed cost plus profit, but dividing it by CS ratio. CS ratio is 0.36. So we need to have 12,000 units or 82,857 sales revenue to have 20,000 profit. Now let's prove it. 20,000 units multiply. I will directly do it by percentage because I've already found percentage. It is simpler, but you know that both of them works. So directly multiplying by the percentage. If you take 2,000 divided by 9, it gives you that 22%. So it should be exact same thing. So I'm taking units, I'm finding each unit, the quantity of each product sold. So when we add it together, it should be the same as top. Okay, units I've already done here. Now multiplying by the sales price, we have 96866. So adding it together, we have 82,857, which you can see here is exact same thing. So I just did this to prove it or link it with this one. Otherwise, if I directly multiply by contribution, it will give me the answer. Contribution is 521. Adding it together, 30,000 contribution minusing the 10,000 fixed costs, we will have a profit of 20,000. Okay, sales revenue, if you want to find each product separately, take the total sales revenue direct. If you wanted to find directly, take total sales revenue of the product divided by sales revenue in a mix. So do this for all three products. Break-even sales revenue, or target sales revenue, and then sales revenue of Y divided by total sales revenue in a mix. Target sales revenue multiplied by sales revenue of Z divided by sales revenue in a mix. So when we add it together, it should be the same thing as above. Okay, so this is simple, a single product and multiple product break-even point done. I look at this question as well. So there's nothing new here. So I've already answered it. Look at it. Now let's look at the charts. Now charts you will not be expected to answer in exam because obviously there will be no way of making charts as it has become computerized exam now. But you need to understand charts just in case if it comes in multiple choice question. Okay, remember in charts you have vertical axis. I've made a chart here. You have vertical axis and then horizontal axis. Usually units are on horizontal axis, and then cost and revenue will be on vertical axis. So the first thing, looking at this question that we have here, let's find the data for the chart. We have 25,000 fixed costs, which you will directly put parallel to the units. So what I've done here, I've taken each number here as 10,000. So we have 10,000, 20,000, 30,000, 40,000, 50,000, and then each number here is 200. So we have 200, 400, 600, and 800, 1,000, and so on. So the first thing, the easiest thing is the fixed cost. So they will, the way that it will be asked in exams, they will ask you to identify components in the graph. For example, if they are not mentioned, they could ask you what a certain line is. So this is the fixed cost line. Next, we look at total cost line. Think of any units. Let's look at 1800 units, the for cost sales that we have here. The 1800 units, if we look at the cost variable, would be 40. So 72,000 plus the fixed cost, which is 25,000. So at 1800 units, the total cost is going to be 97,000. So you take a line. Obviously, you will not be able to do this in exam. This is how you will do it practically. So I have 1800 units here at 9. I have 1800 units here. So I will draw a line parallel. Remember, 9 multiplied by 200, 1800. So at 1800 units, I have 97,000 total cost. Remember, variable cost starts at the top of the fixed cost. That's why this line is a total cost line. So we have 50,000, 60,000, 70,000, 80,000, 90,000, and then in the middle would be 95,000. A little bit higher than the middle would be 97,000. So somewhere here. So I will draw a line parallel to the X. Next, what I will do, I will take a line, I will start it from the top of the fixed cost here, and I will take it so that it goes from the corner here. You can see it goes from the corner. So I can extend this line as much as I want. You just have to go through that corner. Now I can remove this. I can remove this one as well, but I need this for revenue, so I will leave it. Let's say, let's find revenue. If we have 1800 units, we have a sales price of 60, so our revenue would be 108,000 for 1800 units. For same units, 1800 units, our revenue will be 108,000. So here we have 100, here it is 110,000. So about somewhere here, there will be 108,000. So I will take a line. And then I will draw a line all the way from the bottom. Remember, revenue line starts from the bottom. So I can extend it as much as I want. But the important thing is it should go through that corner. Okay, so now remove it. So you have fixed cost, total cost, and revenue. This is the fixed cost, remember. From here to here is fixed cost. From here to here is variable cost. And then this line is total cost. Remember, it is not variable cost. Variable cost is just this part here. And then when revenue is more than our cost, that is our break-even point. If I find break-even point for this question, it would be 60 minus 40 becomes 20, and then taking a fixed cost of 25,000 divided by 25,000 divided by 20, it gives me 1250 units. So you can see here we have 1200 units, and in the middle it would be about 1250, because here it will be 1100, so here it will be about 1250. So you can see that break-even point is exactly the unit. So this is our break-even point. Okay, remember, break-even point is mentioned here on units. So this is our break-even point, and our budgeted sales is 1800 units. So this is our margin of safety. This part here, red, is loss, because when revenue is less than the cost, we are making loss. And then this one is profit, green, when revenue is more than the cost, we have profit. We have other graphs as well. Contribution graph. Contribution graph or break-even graph are similar. The only difference is the fixed cost. If I remove the fixed cost, from here, see, both of them are same, yeah? Both of these graphs are same. Now the difference between break-even chart and contribution chart is the way fixed costs are presented. What we do with fixed cost is we started at the bottom. And then we will point somewhere in the middle where we have 25,000, like I have pointed here. So we have 1, 2, 3, 4, 5. So about 25,000. So I will take the line, fixed cost line, and I will make sure it goes through this point here so that it is parallel to the total cost. This is the only difference. Now break-even point is same, margin of safety is same, profit is same, loss is same, profit is same. The only difference is the variable cost comes to the bottom, fixed cost goes to the top. Now this gives us an information that the previous chart didn't give us. It gives us information about contribution. See, we have variable cost, this line, and this is the revenue line. So this one here is contribution, this yellow. Now it is not possible in this chart. So that's why it's called contribution chart, because it gives us information about contribution as well. Okay, so we have fixed cost, these two, and then this in the middle yellow, contribution. Everything else stays the same. Next is profit volume chart. In profit volume chart, the graph has bottom as well. So we have loss in the bottom and profit at the top. So the ratios of the graph remains the same. I have made it the same. So assume if we don't sell any unit, what will happen? We will make loss of up to fixed cost, and our fixed cost is 25,000 total. So if we don't have any units, we will have a loss of 25,000. So we will start here, and then we will draw a line like how much profit we will make for certain unit. Let's say 1800 units. If we have 1800 units, our revenue will be 108,000 minus the variable total cost, 96,000, gives us 11,000 profit. So 1800 units will give us 11,000 profit. So we will go from 25,000 loss to 11,000 profit if we have if we sell 1800 units. So you can think of any units. Now what we will do, draw a line parallel. We have 10,000 here, so a little bit higher than that would be 11,000. Sorry, 1800 is here, somewhere here. This was something else which I made it for. So I will make another line at 1800 units. Let's make this 10. Okay. So I'll draw a parallel line. So we want 10,000 is here, and we have 11,000, so 11,000 will be a little bit higher than here. So I'll draw a line that goes all the way to 11,000 here. So that will give us this contribution. This is the contribution line. So below this we have loss. Above this line we have profit, and then the break-even point, the margin of safety, and everything else stays the same. Okay, we have the same three charts for multiple products as well. Now, break-even chart, a contribution break-even chart, you do the same thing, everything that we did for single unit, but the only difference would be we will find fixed cost and total cost for all units in a mix. So you're not just looking at one unit, you're looking at the total revenue of all units, total cost of all units, and then fixed cost. Contribution also stays the same. And then fixed cost, the profit volume chart, you can have a straight line from bottom all the way to the top, just like we did, but remember, do it for all units, or you could break it down into different components of the product. It will have the same result. So I will not focus on it as much because it is not important for exam. Graphs will not be examined as much in details, but I've made graphs. Still look at it and understand it. Otherwise, this is it.